China's debt crisis affects its local governments, property developers, banks, and overseas lenders. China's total debt is almost 3 times the size of its economy. This is the highest level in 27 years. China's debt problem is mainly caused by local governments. They borrow money to finance infrastructure projects ordered by Beijing. But these projects often have low returns or are unprofitable. One of the biggest victims of China's debt crisis is Evergrande, the largest residential developer in China. Evergrande defaulted on its $305 billion debt obligation in December. This triggered a domino effect on other property developers, banks, and investors. Evergrande's default also hurt the real estate market, which accounts for about a quarter of China's GDP. China's debt crisis also has global implications. China is the world's second largest economy and a major trading partner for many countries. China's debt crisis could affect global growth, trade, and financial stability. China's debt crisis also threatens its Belt and Road Initiative, a massive infrastructure project that spans over 70 countries. China has had to renegotiate some of its overseas loans with countries that are struggling to repay them. Some of these loans involve write-offs, deferred payments, or reduced interest rates. China's debt crisis poses a challenge for President Xi Jinping, who is seeking a third term, and she has vowed to control financial risks and maintain social stability. But he also faces pressure to stimulate the economy and support the pandemic recovery. She has taken some steps to address the debt crisis, such as passing a new financial stability law and injecting liquidity into the property sector. But these measures may not be enough to solve China's deep-rooted economic problems and prevent a full-blown debt crisis. China has had to manage a number of defaults and renegotiations on sensitive overseas loans, some of which involve write-offs, deferred payments, or reduced interest rates. These loans are part of China's Belt and Road Initiative, a massive infrastructure project that aims to connect China with more than 60 countries across Asia, Africa, and Europe. However, many of these countries are struggling to repay their debts to China, especially amid the COVID-19 pandemic and the global economic slowdown. According to a study by the Rhodium Group, a New York-based research group, the total value of loans from Chinese financial institutions to projects in Belt and Road countries that had to be renegotiated in 2020 and 2021 hit $52 billion. This is more than half of China's total overseas lending. In the Financial Times called this China's first overseas debt crisis. Some of the countries that have received bailouts or debt relief from China include Argentina, Pakistan, Kenya, and Turkey. These countries have borrowed billions of dollars from Chinese state-owned banks to build dams, railways, roads, and power plants. However, many of these projects have faced delays, cost overruns, or low returns. As a result, these countries have faced difficulties in servicing their debts and maintaining their foreign currency reserves. China's approach to dealing with its debtors has been opaque and uncoordinated. Unlike other major lenders such as the International Monetary Fund or the World Bank, China does not disclose data on its loans or currency swap agreements with other foreign central banks. China's state-owned banks and enterprises also do not publish detailed information about their lending to other countries. This makes it hard to assess the full extent and impact of China's overseas lending. China's debt crisis could affect the global economy in several ways. First, it could undermine the stability and growth prospects of many developing countries that rely on China's financing and trade. Second, it could create geopolitical risks and tensions as China seeks to protect its interests and assets in debtor countries. Third, it could hamper global efforts to address climate change and environmental issues, as many of China's funded projects are highly carbon-intensive. Therefore, it is important for China and its debtors to work together to find sustainable solutions to their debt problems. This could involve greater transparency, coordination, and cooperation among all stakeholders, as well as more rigorous assessment and monitoring of the economic and social benefits of the projects. It could also involve aligning China's overseas lending with global standards and norms on debt sustainability, environmental protection, and human rights.